Hello everyone, welcome to my channel Let's Create Wealth. In today's video, we will be discussing how to select a mutual fund for investments. 2-3 decades back, our parents and grandparents used to have only 4 popular options for investments: real estate, fixed deposit, gold, and life insurance policies. Fast forward fast. Gen X has totally changed in Indian dynamics with respect to investing in last decade. There has been a massive inflow in stocks as well as mutual fund SIPs by the Gen X. Now, before I jump to the topic, what parameters do we need to use for mutual fund investments? I have a question for you. What parameters do you use before investing in mutual funds? Let's look at the video below.
Kohli goes down the ground. Kohli goes out of the ground.
Yes, we all look at the past performance of the mutual fund, and we also expect our mutual fund to perform like Virat Kohli in coming years. It's quite natural, right? Uh, Now, let's jump and see the parameters which we really need to review before selecting a mutual fund. So, first is the mutual fund performance. Mutual fund performance is something which we should see for 3, 5, 10 years to see if there is a consistency, which we all do. Second is we should look at the AUM of the mutual fund. How big the size of mutual fund is. Is it 5,000 crores? Is it 10,000, 15,000? Generally, a mutual fund which is less than 10,000 crore, it's very easy for a fund manager to manage the positions of stocks. If a mutual fund crosses 10,000 or 15,000 crores of mark, then it becomes a little tricky for the fund manager. So we as investors, we need to see is there a drop in the returns as the fund AUM increases, right? Uh, then third is the fund manager. How long the fund manager has been with the particular AMC? How long the fund manager has been in the industry? What are the objectives of the fund manager? What is the thought process of the fund manager? So all these things play a very important, vital role, which helps to gauge the fund which we are planning to invest. The ratios, there are multiple ratios which we need to understand: alpha, beta, standard deviation, Sharpe ratio. And last not the least, we also need to understand what is the exit load as well as the expense ratio for a given mutual fund. So let's go into details to understand these terminologies one by one. Alpha measures the risk adjusted performance of a mutual fund. Let's take a simple example. Let's say the small cap index has given 10% returns in last 1 year. And if you look at SBI small cap funds alpha, it is 7.7%, which means SBI has given additional 7.7% returns on top of 10% returns of benchmark index, whereas HSBC has given 9.79% returns because it has an alpha of minus 0.21. Next is beta. Beta helps us to check the volatility of a mutual fund. Any mutual fund having a beta less than 1 is a low volatile mutual fund, whereas a mutual fund which has a volatility of more than 1 is termed as a volatile mutual fund. So as you can see, Axis Large Cap has a beta of 0.81, which means it's less volatile than Nippon Large Cap, which has a beta of 1.07. Standard deviation, this is quite interesting. Most lot of folks who are interested in mathematics will like that. So what is standard deviation? It means it's a statistical tool which helps to measure the deviation from the mean or the average. So let's take an example of, again, Axis Small Cap Fund, which has a standard deviation of 23.72%. So let's assume Axis Small Cap Fund has given an average return of 20%. So what it means is, it means that Axis Small Cap Fund can give a positive return of 43.72%, and it can give a drawdown of minus 3.72%. So basically, it calculates both the extremes based on the standard deviation as well as the average return which a mutual fund has given us. So this is quite helpful in gauging the overall swing of a mutual fund from drawdown to the uptick. Sharpe ratio. Now, what is the Sharpe ratio? Sharpe ratio measures the unit of return earned for every unit of risk taken. So, in layman's language, higher the Sharpe ratio means higher the returns, in turn means higher the risk. So, how do we calculate the Sharpe ratio? So, Sharpe ratio can be calculated by using the formula average return from the scheme minus risk-free return divided by standard deviation. So I think we know what is the average return from scheme and the standard deviation, which we just discussed a few minutes back. Now, what is a risk-free return? Risk-free return is something which is, let's say, a fixed deposit return, which is 5%. So that is a risk-free return. Now, let's say we have a mutual fund which has an average return of 12%. So how we will calculate the Sharpe ratio for that mutual fund? So for that, we can use the formula again, which is 12% minus 5% divided by standard deviation, which is again 5%, which gives us the number 1.4. So it means that for every risk of unit we are undertaking, we are getting 1.4% return, which means this has a higher risk, higher Sharpe ratio, which means the returns are also higher. So that's how we calculate the Sharpe ratio. Now let's move forward to the expense ratio and exit load. So I think this is most of us already know, but I'll just repeat for the interest of everyone. So expense ratio is nothing but it is a fee which we pay to the mutual fund house so that they can perform their admin task, they can do their advertisement, etc. Right? Generally, expense ratio which is less than 1% or 1% is deemed fair. Anything which is more than 1% is at a higher end. Exit load is nothing but a fee which we have to pay to a mutual fund house if we sell any mutual fund units within 6 months or 1 year based on the terms and conditions which are captured in the mutual fund TNC's document. So now let's move forward to the fund recommendations, right? I did lately got a request to provide some fund recommendations. So I will provide a fund recommendation where I am investing my money. So I would like to highlight it very clearly. I'm a very, very aggressive investor with respect to mutual funds. I only invest in small cap funds, which means it has a huge volatility and there can be large drawdowns and there can be large upticks also. So if you are an aggressive investor, only then review these funds, perform your due diligence, and invest your money. For other large cap, medium cap, or debt funds, I can create a different video on the needs. Now, quickly, let's jump onto the Axis and Canara Robeco Small Cap Fund. Um Axis Small Cap Fund, I like this fund because the portfolio turnover ratio. So there is the churning is very less. Typically, if you see the average category average churn is 35%, which means the fund manager keeps on changing the portfolio by buying and selling. I'm not saying it's bad, but I like a fund manager who doesn't churn and stick with their stocks for long. Equity holding is at 82%, followed by 76 stocks in the portfolio. Small cap investments are at 59%. They also have some of the mid cap investment at 6%. And there are certain other investments the fund manager has made close to 18%. Now, if I look at the stocks, Fine Organic, fantastic company. It's growing at a very fast pace from past 2 3 years. If you see the quarterly results in chemical space, similarly, Galaxy is a fantastic chemical company, followed by Narayana and Brigade. Brigade is a very big uh, real estate player in South India, namely Bangalore, as we all know, and Chennai. Then Krishna Institute of Medical Sciences, CCL, Birlasoft, JK Lakshmi, Orient Refractories, and Blue Star. All of them are fantastic picks from the fund manager in the small cap universe. I like all these stocks and the portfolio of the top 10 stocks. Now let's look at the returns. So I think it's performed pretty well. If you look at last 3 5 year returns on annualized basis, it's 29 and 21% returns in last 3 to 5 years. And since inception, it's 25% return, which is fantastic. So it was incorporated in 2013. So it's not it's 9 year old mutual fund and 25 years CAGR. It's quite good. Now let's look at the SIP returns. So SIP returns, if I look at 3 and 5 years, it's 33 and 27% returns. Again, it's phenomenal. If I compare this with the fixed deposit, it's close to 4x or 5x, right? So fantastic returns by Axis Small Cap. Let's review Canara Robeco. Again, single digit portfolio turnover ratio for this fund by the manager. A fantastic job. Equity holding is 95% more than the Axis. I like this fund more than Axis. Number of stocks are 73, which is almost similar to the category average. Now here there is a small difference which I want to highlight. Small cap investments are 57%, whereas there are a part of mid cap investments also, which is 17%, which were less in the Axis fund. And there are some large cap investments also, which the fund manager has just done a couple of quarters back. Again, there are some other investments fund manager has done in as a part of this fund holding. Let's look at the stocks quickly. City Union Bank, it's a fantastic bank. I like this bank. It's a smaller private sector bank and has been growing very steadily, very minimal NPAs. So I like this bank. Schaeffler India Bearings, fantastic company, along with Timken. Both of them are MNCs and hold their customers very tightly and are growing at a very faster pace. Also, they are exporting from India to other countries. So they are a very good set of stocks in bearings field. Sera, Indian Hotels, Century Textile, Grindwell Norton, Credit Access Grameen, it's an NBFC, Camfin we all know, and Aditya Birla Fashion. So it's a mix of finance, NBFC, bearings, sanitary, retail. I think it's everything is in this bucket, and it's a great portfolio. Now let's quickly see what are the returns. It's a one thing I want to highlight. It's a quite new fund. It's just 3+ years old. So it was incorporated, or it started in February 19, which is 3.5 years back. But if you look at the returns for last 2-3 years, it's fantastic. It's 49% and 41% returns, absolute returns in last 2 and 3 years respectively. And if I look at the SIP returns annualized are at 32 and 43%, which is also good. Yes, part of it is because of the COVID rally, but again, if you see last 8 to 10 months have been brutal for all of us retail investors. Still, this fund's performance is pretty good. If I look at 1 year performance also for SIP, which is 17%. We as a retail investors have a goal to beat the fixed deposit, and that's what we are trying to achieve here. So yeah, so I think that's all I have from the fund perspective. If you like the video, please press the like button and subscribe my channel. Also, if you would like me to cover any additional topics on investing and mutual funds, please enter the same in comment box. Till then, thank you. Bye bye. See you later.